what are you expecting? I mean, you can talk about gold, I guess, if you have to, but at least let's start with silver. What is Dave's forecast for the end of the year, which, I don't know, 5 or 6 weeks left? What do you see happening to close out this year? Hello there, my friends. Chris Marcus here with you for Arcadia Economics. I am with mi amigo Dave Kranzler. Dave, I was thinking it was weird. We say Denver Dave Kranzler. May be a little weird. I find it fascinating how decades of civilization and, we still get amused by Taco Tuesday, Denver Dave, other alliterative concepts.
So we do Tostada Tuesday.
Well, that's great. In either case, you live in Golden, not Denver, so I don't know where that got started.
Bill Murphy at La Metropole Gata, he's the one that originally started calling me. I think he started calling me Dave from Denver because I used to send in commentary every day for his Midas report. Yeah. And so he would call me Dave from Denver. And then I think Turd Ferguson started calling me Denver Dave.
Yeah.
I think that's how it, I don't know. There's nothing I can do about it.
That's some inside scoop stuff there, buddy. It's like insider VIP, like membership club, like behind the scenes knowledge. We'll put that in your VH1 special. And by the way, Dave, just want to mention that your show this week is brought to the world by Arcadia Gold. Saw Marco Rock, who runs Arcadia Gold, on the show about a week ago. Dave, maybe you can take a look. I know people would love to hear from you in your mining stock journal. They did have some results recently. You see here, primary goal of this drill program was to continue to confirm and expand the 43-101 inferred near surface resource, 1 million ounces at 1.43 grams per ton. So anyway, we'll have a link to a video about Arcadia at the end of this show. Do check them out. Dave, maybe you can check it out, see what you think. Let your readers know.
I will.
Thank you, Marco and Arcadia, for bringing us this week's show. So with that said, Dave, let's hop in. Somehow it's November, even I think late November. I don't know when that happened. But what are you expecting? I mean, you can talk about gold, I guess, if you have to, but at least let's start with silver. What is Dave's forecast for the end of the year, which, I don't know, 5 or 6 weeks left? What do you see happening to close out this year?
Dude, the adage says, he who controls the gold makes the rules, not he who controls the silver.
Yeah, well, was that like another Rothschild adage? They also told me,
No, I don't know how far back that adage goes, but it goes way, it's centuries and centuries old.
All right.
You should watch the HBO series called Rome. It's a 2-season series. It's phenomenal. And one of the things that sticks out is that whenever they go into a country, the first thing they do is grab the gold when they conquer it. And the gold is that's where that's like the symbol of power. I mean, Caesar had a gold eagle that he had on a stick that he, went around with just to remind everyone who the king was.
We're definitely gonna mint one of those for your fans. They can get the Dave Kranzler golden stick. We'll sell it in the Arcadia store. But come on, that's great. I'm real impressed by your history and name dropping and all that. But what's gonna happen with silver for the rest of the year?
Well, between now and December 31st, it's either going to be higher or lower.
What if about the same? Smart ass.
I'd say it's very low probability that it will be the exact same price at the end of the year that it is right now. In all seriousness, I think it's pretty apparent to seasoned observers that there's definitely a program in place right now to cap the price of gold and silver. And I'll just refer to gold, but it refers to gold and silver. The BIS is executing gold swaps with central banks and banks at record levels. You've got options December options expiry on COMEX futures next Tuesday. And if you look at the put call structure, if they can pin gold below 1900 by the time the options expire, the market makers, the writers of the options, especially the call options, stand to make a lot of money because there's a lot of calls outstanding at 1900 and above. And it's mostly the market makers that write those options. So they'll keep all that premium that they wrote as long as gold closes below 1900. So I guess my point is that I actually expect after next Tuesday that we're going to see another move higher in gold and silver. And it's I mean, you know, the Federal Reserve FOMC members have been, I mean, seems like there's like 5 speeches every day now for the last 2 or 3 weeks or 4 weeks. And, you know, they remind us that we need to, you know, the economy is still, you know, the recovery is still at risk, and we need a big fiscal program. And essentially it's the spade work prepping us for more money printing to come. And I don't know if that happens before the end of this year, or they'll just wait until after the beginning of the year. I think part of it's going to depend on how bad the bank balance sheets are melting down. But the point is that they usually try to implement heavy capping of the gold price ahead of another round of money printing. And it's been that way since 2008. So, I mean, you can go look at the charts and you see what happened to the price of gold right before the massive QE was announced back then. So at any rate, I expect a move higher sometime, you know, next week and be, you know, through the end of the year. So in terms of, you know, price points, I don't know. I hate to stick numbers on my forecasts, but I think we will be back over 1900. I don't know how far over 1900 in gold and silver. I wasn't even really watching silver today. So December silver's 24.39. I don't know. It's probably going to be pushing 26 by the end of the year is my best guess.
Yeah, well, that would be nice. Question for you on what you mentioned there with the options expiration. I've been meaning to dig into this further. Perhaps you can comment here. Is that going to be next Tuesday? Because it seems like we often have one of these whoppers, right? Nice to see here, like 2 days in a row, just at the same time, of course. It's interesting. The chart pattern looks the same, drops down there, comes back up, then around lunchtime, sells off. But would you expect another spike down? And which days are we looking at? Just so, again, this is not legal financial advice, but for people who are going to be keeping an eye on this, just so they can know when to keep an eye out for.
Well, options expiry is on Tuesday, right? You know, it's essentially, I mean, this minute the COMEX hours, the floor hours stop, that's when they expire. So
what would you say is the probability that on Monday or Tuesday of next week we see in both gold and silver a move like that?
You know, the funny thing about that is Jim Sinclair, when he used to write, you know, and post on his blog every day on his website, he referred to those as fishing lines. So his motto was, you buy the fishing lines and you sell the parabolas. So I mean, I think it's going to depend on you know, how you know, to what extent gold threatens 1900 between now and next Tuesday. So you know, I mean, if gold rallies overnight like it has been doing most of the time, because India has been such a voracious buyer of gold right now. I mean, we had a rally last night overnight. We were up at, and this is actually when I went to bed. We were at 1884, and I woke up and it's like at 1862. I'm like, oh great, another drive-by ambush on the price of gold in the paper market. I mean, if gold is threatening 1900 at any point between now and next Tuesday, you're going to see more of those fishing lines. So, I'm not adding to positions right now on this sell-off. I kind of wish I had raised a little more cash than I did before, the last couple of weeks. I kind of sense that we're probably going to be in for some rough waters for a bit in the sector. I think as soon as this thing stabilizes and starts moving higher, I think it's going to really take off. It's interesting because I'm starting to see a lot of commentary from and articles from entities and people who, I've never, professional money managers who I've never seen before, talk about gold and silver. So I think that the investor base in the sector is much broader and much deeper than it was, say, from 2001 to 2011. I started in this sector in 2001. So, and if you're a chartist, I was just looking at charts yesterday of gold and silver and GDX, just as representative of the mining stocks. I mean, they're building what could be a very powerful base from which to launch off of. The way I look at it, it's very bullish chart formations, because you had the big run up into early August. You've had a pullback consolidation. A lot of the hot money's out. Why do I think that? Because a lot of the junior mining stocks, the exploration, the micro cap, venture capital juniors, as I call them, those things, a lot of them went up, 5 to 10 times between March and August. And a lot of that hot money, I think a lot of hot money piled into those stocks in July. I mean, I could just see it on the tape. I had stocks in my portfolio that were going up, on some days, 10 or 15% on no news. So I think a lot of that hot money's washed out. I mean, a lot of those juniors are down 50% from where they were at the end of July. And so you've had a nice basing period from this pullback in the sector, and I think it's going to provide, like I said, a very powerful platform from which to launch. As soon as we're through this rough water period, which I think should end next Tuesday. I'm not going to guarantee it, and no one knows for sure, but that's kind of typically how the pattern goes ahead. Especially, December is one of the largest delivery months, so. The intervention gets a lot more violent, between now and options expiration, and sometimes between now and the first notice period for December gold.
I hear you. Will be fun to see. Although, Dave, I can explain the increased interest in the sector. And what I'm going to go with is that all those young Chicago MBAs, they're seeing the cash in front of that or behind that Caterpillar truck. They're picking up the Mining Stock Journal. And certainly if you were actually graduating a college or post-grad or MBA program and actually did want to differentiate yourself, maybe it won't get you that job at Goldman, but Mining Stock Journal is the way I'd go, kids. So just a note to folks at home. But we'll come back to your journals and all that. In terms of, all right, each week, silver, gold, blah, 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 this and that, money printing. But, perhaps as a little context, I was thinking about this. The ratio of debt to gross domestic product, I know these numbers, a trillion here, a trillion there, loses sight. But here, 98.2%. I think that's pretty outdated. Here we see reaching an all-time high of 118%. Which Dave can compare that to, here's Argentina that goes through a currency crisis, I don't know, almost once every decade, unfortunately. And the US is well beyond those numbers. And I know you were saying that's not even really giving us the tip of the iceberg.
So I don't even remember what they claim the GDP number was for, let's just say Q2. Oh, here we go. 21 trillion for Q3 allegedly. So, and the debt number right now is 27 trillion and change. So the debt to GDP is 128% right now. And that doesn't include the Fannie and Freddie debt, which I don't know what's going to happen in terms of the government guarantee of that debt when Fannie and Freddie are spun back off to the public. I don't know who would want to invest in those stocks. I certainly wouldn't. But right now that debt's guaranteed by the government, and that's about another, I don't know, 10 trillion that needs to be added on to the Treasury debt load. And then I see what your point is. Yeah, the U.S., the government debt to GDP is among the highest in the world, but there's other countries that have higher debt to GDP. But if you look at total debt outstanding in the U.S., and that includes government debt, corporate debt, private sector debt, household debt, the total public debt is, here we go.
We could also throw in Social Security and Medicare too. I mean, let's not leave those out, because obviously you factor those in, the numbers get really disturbing.
Oh yeah. Well, and then there's, you can always go into the what do they call them? The I guess the contingent liabilities, like, the Medicare, the entitlements, the future value or the present value of entitlements out to some unspecified point in the future. I don't necessarily use those, because at some point the government's just going to have to, it's either going to have to print a ton of money to fund those programs, or it's going to have to default on them. So,
do you think there is a reset being planned right now?
It certainly seems that way, based on, there's a lot of, it seems like there's like a very high level of elitists that have been referencing resets and things like that. I don't know what the alternative is. There's just so much debt globally that there's no way that it could ever be serviced without, an insane amount of money printing. So, yeah, I think at some point there's going to be some type of reset, and, who initiates it, what it looks like. I have no idea. No one knows what it's going to look like. I do think it's going to cause a lot of social unrest problems, though, when it gets implemented.
Well, we will certainly hope not. And maybe the investment research dynamics site could cover like social aspects of how to respond. Maybe you could give some prepping advice too, Dave. You could be like a full service shop. But one question we do get quite a bit here at headquarters, people wonder, do you have much concern of the miners getting nationalized?
If someone's worried about that, and that's what they lose sleep over it, lose sleep over it, they shouldn't be invested in the miners. I don't know. If the position of the U.S. government is that gold is a barbarous relic, and the position of the central bankers in the U.S. are that gold is it's not money, why would they want to nationalize the gold and silver mines here? What would be the point? If we get to the point where the government starts nationalizing basic industries, you may as well just leave the country, unless you want to live under that type of system. So
Not be that far off.
it may not be. I mean, who knows, you know, but right now we've got, all we know is the playing field that we have to play on right now. And so I play on it. And, you know, if an event like nationalizing the mines were ever to come to fruition, I don't think it's something that would be telegraphed. I think it would just happen, you know? So if you're worried about it, then don't play on the playing field.
Steve's playing field. We're all just participants in the game. Last reader question I have for you there, my friend. Someone was commenting on Japan and how, I mean, it's like on one hand, the stuff that's happening now seems like, gee, how much longer can this go on for? Japan shows us a long time. We'll just go to the all pop. Does Japan, I guess the fellow that asked this was asserting, you know, maybe it can go on forever. Maybe there is no end to the manipulation. What would you say to that?
Well, I think part of, again, you know, I haven't spent a lot of time studying it or thinking about it, but I mean, there's big differences between Japan's, the fiscal condition of Japan and the fiscal condition of the United States. I mean, Japan is a net exporter, right? They run trade surpluses. Yeah, there's an insane amount of public debt there, of government debt in Japan, and probably corporate debt, but I mean, households there are financially in much better shape than they are in the U.S. No, this can't go on forever. I mean, if you could print money like this forever, then we would all be speaking German right now, right? Because the Weimar German regime would have never collapsed. So, you know, they'd still be over there. We'd all be using Deutschmarks, you know, as our currency, and they would just print it up every time they needed to, like, subsidize social lifestyle, or, you know, pay some bills. Oh, Russia, you want to get paid for some of your fighters that you sold us? Well, here, let me just crank up the printing press. I'll send you some marks in the mail.
Well, Dave,
you know what I'm saying? Can this go on forever? No.
One day when you're least expecting it, I'm going to come and litter some U.S. fiat notes on your front yard and steal your wheelbarrow. And it'll be nice because you won't be able to do anything.
Yeah, but you know what? I wouldn't
your mask on.
I wouldn't shoot you for littering my lawn with dollar bills, but I'd shoot you for stealing the wheelbarrow, because that has value.
Yeah. Well, I'll leave an extra mask behind for you. I know how you like that, and you layer up safely wherever you go out. Dave, before we close out, can you let folks know of where they can find the answers to this? I mean, you're kind enough to lay it out clearly enough that even a congressman could understand it, which isn't easy to do, I might add. So can you let folks know about the journals and how they can find all that? Where do they get those stacks of hundreds?
I mean, Investment Research Dynamics is my blog, and there's links there where you can find out more information about my journals.
Well, fortunately,
it's free to look.
Free to look, and you can click on that in the description field right below there.
Pretty good, right?
A little practice this week. Practice. So, folks, thanks as always for watching. Dave, thank you for being here. You know,
Thank you for being you, Chris.
Well, I'm trying. I'm not sure I can tell what's behind that statement, but yeah, I mean, I think people love hearing from you every week, so it's fun to do that. And again, just as we wrap up, today's show was brought to you by Arcadia Or. And to find out more about what they've been doing, there's a video coming your way now.